So good afternoon, everybody. Nice to be back, not wearing a Christmas tree for those of you that were here this morning. The talk I'm going to give over the next few minutes is around my day job, which is actually in cybersecurity. So cyber is a very popular term at the moment. It's on the front page of most business newspapers every few days. I always know that things become mainstream in kind of popular language when two things happen. My 12-year-old daughter understands my job and says, Dad goes and stops viruses and malware from flying around. And my 75-year-old mother is asking around things to do with security because she's asked. So what I want to do in the next couple of minutes is just spend a few minutes around, raising the base level quite often of what cyber is and where it's going, and give a few examples of what's happening in the finance sector right now in terms of malware and Trojans and other things that you should be thinking about, whether you're in innovation, in banking, whichever part of fintech you are. So I'll start with this just as a warning. So 169 days until what? And hopefully everyone knows the EU symbol in the middle. That would be until the GDPR comes into effect. So that being obviously one of the core bits of EU legislation. In reality, it's around privacy. It's not around cybersecurity. If any of you have taken the time to read the 99 chapters of it, it's compelling. The only 3 chapters really are involved around security and this concept of state-of-the-art. But what this is really going to mean is that companies that haven't so far will have to inform publicly around breach, where they've been breached. So think around the recent example of Uber with 57 million records, compromised but not disclosed for 5 or 6 months. Those kind of things will become illegal. So this is just a catch mark to say if you're not already, and I'm sure everyone in the room is, then you need to be thinking about this, and hopefully many of you are advanced with plans and processes in place already. I'll start also with the next thing with a face. So I'll give you a moment whilst I go through this to see if you recognize that individual. But fintech and finance, the financial services overall, and some of it's potentially obvious. Finance based on threat intelligence, so actual data mined, is in the top 3 industries of all time for security incidents. So for cybersecurity breaches, for compromises, for attacks, and not all of those obviously are public. It's actually the #1 industry for confirmed data loss based on volume and size of breach. This is all data from a Verizon report, 2016. And importantly, 35% of loss across all industries. So finance actually makes up for more of the loss than the next 4 industries combined, including public sector, healthcare, and entertainment. So unsurprising, potentially. So the character here is a gentleman called Willie Sutton. If you look him up, he was a thief. He was a bank robber, a New York bank robber, in fact, active between around 1920 and 1940, and he stole around about $2 million. Obviously a lot in those times. He was jailed 3 times, spent most of his adult life in jail, broke out 3 times, which is why he kept going back to jail. He robbed more banks. And the phrase that's associated with him, quite simply, is, Willie, you're not very good at doing this. Why do you do it? And it was pretty simple, because that's where the money is. Right, so this is the thing. So there's a huge amount of interest, obviously. It's obvious, but it always needs to be restated, because I think what's key here is it applies to all companies, but anyone small to large, and I'll give you a few stats on that. If we look at what's going on, I think, and what the themes are for this conference, then there are lots of different challenges and things going on in the financial services world. The customer experience is key. How people are interacting with new platforms, with existing financial services, the change around how customer services are delivered, how we all interact, whether it be mobile banking, which I imagine for most people is in their pocket right now, to all sorts of other things, new financial trading platforms, new ways of interacting, new ways of insuring. And if you look to the middle, this idea of structural cost saving, 2 things happening in here. For established companies, the concept of structural cost saving is, how do I transform myself ready to compete in the new fintech future? I have disruptors appearing all around me in the marketplace. And how do I compete against those when I have this huge potential legacy of great business, but I need to transform on the way? You get structural savings. And enhanced compliance. So GDPR is one. The NIS directive is another piece of EU legislation. In the UK, we're also in debate at the moment around the data protection bill. Many countries have set up their own national cybersecurity centers or equivalents thereof as government entities, and are busy deploying programs around cyber awareness. And then we look to the maybe to the bottom side of this, some of the challenges that we have, and banking has, as an example, has a number of these, unpatchable systems. So most ATMs, the places you trustingly go and stick your cards in the wall to get your money from, are built on legacy operating systems that you can't patch, you can't upgrade anymore. So they become security problems. The concept of expanding attack surface, new platforms, new devices, new items every day that we're connecting to payment systems and to ways that we authenticate and manage ourselves, increases what in security we call the attack surface, the number of different ways that attackers can come and find you. And then maybe the last thing in here around context. So the ability to bring the context together of different activities. A good example of where this does work is potentially geolocation. So you're standing in Katowice today, but your credit card is currently being used in Krakow. By now, pretty much everyone will find that and stop that. There are many other ways of finding different types of threats and profiling, even based out of the same location, based on intelligence around sites you visit, behaviors that you have. Behavioral analytics, the idea of finding and spotting people doing unusual things compared to their normal behavior, is a big science. So what's happening in banking right now? So the pie chart on the left is from a report by IBM's X-Force, and it's a list of names. If you're in security, you may recognize a few of those. If you're not, they'll just look like names of Greek gods and other things. The ones I pull out are three that are pretty pervasive and current. So Turdo is a banking Trojan, Trojan being something that makes itself look like someone else, very much the Helen of Troy Trojan horse model. And this is sniffing financial details off financial networks. It inserts itself into websites. It can modify HTTPS traffic, so what you think is secure. And it can also manage social media for you. So it can not only do things and steal your banking credentials, but actually send a tweet out on your behalf and say how much you enjoyed the experience. So this is pretty bad. Locky is ransomware. WannaCry and NotPetya are two massive things this year, and Locky is another one, pervasive still. And this says Immotel. It should be Immotet. This is another one that's out right now, injecting itself into banking, into web processes, really being used as a phishing method of starting. But then what it does, it inserts itself into every process that you're running on your server, on your desktop, and then uses that to sniff at your network traffic, and again steal credentials, which it then later uses to compromise. I share these all three because I ran threat intelligence just a day ago before I flew out here. And this is where some of this was coming from. And for the examples I'm giving you, this is where these particular ones were destined. So if you can't find the spot, the good news is this is a very popular country. Okay, so just in case you think it's not us when this isn't about us, this really is. A couple of other stats just in terms of breach. So this chart again, another one from Ponymon. But the idea here in the pie chart, micro to extremely large, is what types of organizations are being targeted. And the takeaway message here is size, at some extent, doesn't matter. In fact, the smallest elements are 10 people or less, and or the 100,000 or more, arguably those to whom they're less visible, or potentially those who've got so much resource assigned to protecting themselves, they're a harder attack target. And what you'll see is that kind of 100 user to 100,000 user model, which probably represents most companies, is the largest attack vector. And again, these are all financial institutions as a market study. If you look at it by numbers, then a few things just to call out. What we see in threat intelligence, we see new malware roughly every 3 seconds. So we'll profile between 70 and 80 million files a month from our customer base around the world. And we'll see new malware roughly every 3 seconds. 50% of that malware travels through what you believe is secure, encrypted traffic. And one of the ways the bad guys move around networks is to go in places you don't look. And when you encrypt traffic, so you make it encoded, people say that's now safe. But actually malware, the bad guys looked and went, that's a great place to transport. So what we're seeing in some of the banking sector now in particular is people say, actually, you know what, we're going to decrypt everything because we need to look, including internal employee data, internal payroll stuff, all sorts of things that otherwise would be private, just to be sure that it is what it says it is. Last thing on the right-hand side, 61% of those files are ones that actually AV doesn't pick up. So lots traveling encrypted and lots otherwise. Malware spreads super quick. So when you look at this, you'll have seen this in popular press earlier in the year. And when you look at this, my last kind of parting gestures for you, as Dan comes to tackle me off, but is this idea of identification and containment. So the minimum time it takes to identify a breach, and then the amount of time it takes to contain it thereafter and contain the business damage, 20 and 7. Those look quite good. That's 20 days to identify it, 7 to contain it. You're no longer GDPR compliant if that's your result, by the way. But here's the real news. That's the mean. The mean is actually 200 days to find it. So that means you've been breached for roughly 6 months before you know, and 70 days to contain it. And the worst case we've seen so far is this. You can think to public companies, that's actually years. So we've been breached for nearly 2 years before we knew. So I'll leave you with this. As a strategy, prevention has to be a core piece of your strategy. And the only way to tackle these things is to get full visibility and to look everywhere. Really understand your attack surface and work on every model you can have to reduce it. Prevent everything that you know, and then really look to the technologies that are around the 0 day, the things that will actually compromise you today. There's a huge amount that goes on in the cybersecurity space. It's moving all the time. What I would say to you is that this has to be prevention, automation, use of AI, and integration have to be core to your security. And the reality is we all need it because we need this to be a very trusted economy. And I'll say thank you.